Hello everyone and welcome back to the channel, and I hope you guys are doing great. So in my today's video, I'm going to discuss with you about a company called Capri Global Capital Limited. It's an NBFC. We're going to go through their recent result. We'll see how well they have done in the past and what is the management guiding for the future, whether the car is running at the same speed or the engine is or the speed is slowing down. We'll look into all through this, but before we get into that, I'll just tell you briefly what does the company does, right? So as I said, it's an NBFC, so it provides loan and it has various product offerings from MSME loans, micro LAP, housing loan, gold loan, construction finance, insurance distribution, and car loan distribution. So they have various products through which they earn their revenue. And if you look at their recent Q4 FY26 result, it was quite great. The revenue grew by almost 45% to 1,385 crores, and PAT was up by almost 59% to 283 crores. And if you look for the whole year, right, they still did quite great. The revenue increased by almost 46% to 4,731 crores, and PAT was up by almost 98% to 949 crores. So we could clearly see over here, right? They had a good growth, and it's not like a normal growth of around 15 to 20% or a good growth of around 25 to 30. They grew by almost 45%, and plus they got operating leverage also. And we could see in the number why, because if you look at the growth numbers, right, their asset under management grew by almost 60% YOY. Their disbursement, the amount of loans that they gave compared to FY25 grew by almost 83.5% YOY. And if you look at the asset quality, that also it's like amazing. GNPA stood at close to around 0.88% and NNPA was around 0.5%. And if you compare with the other NBFCs, this numbers looks quite great. And if you look at the profitability also, right, that also was great. The net interest margin improved to almost 8.6%, which led to, almost 50% growth in the net interest income. And the other important thing which I got from their, investor presentation is like their non-interest income was almost 30% of their total income. So which is also quite a good sign, right? So that clearly shows that not majority of their revenue is dependent, the income is dependent upon the interest part also. They have a lot of income which gets generated to the non-interest side also. And if you look at the cost to income ratio also, that also improved drastically. Last year, the cost was around, the cost to income ratio was around 60%. This year, it came down to 50%, and the ROA jumped from 2.7% to 3.6%. And their ROE, the return on equity, almost increased by 50% from 11.8% to 16.5%. And if you look, one of the important things which happened to to Capri Global in the past few years is the change in their product offering. They started their gold loan division, and that gold loan division like literally skyrocketed their business, because if you look at their asset under management under the gold division, that grew by a CAGR of almost 147% in the past 4 years. I mean, that is literally crazy numbers. And now the gold division alone, the gold loan alone consists of 46% of the overall asset under management. And that is good. And let's look at what is happening for the future, right? So we all saw how well they did this year, what were the reasons, right? How gold loan division contributed, how the net interest margin, has improved, net interest income has increased. They have a good portion of, non-interest income also. Their ROE almost close to increased by 50% from 11% to almost 16%, right? So let's see what the management is doing, and let's understand how does the future look for them, right? See, because the reason we need to look into this, right? See, market looks at the pace of the growth. If the company was growing slowly and it starts to going, the pace starts increasing, the market rewards in a different way. But if the growth was high, but then it slowly starts to reduce, then the market reacts in a different way. And if you look at what the management of Capri Global said, right? So they, so they want to grow their asset under management from current 36,000 to 46,000 crore in FY27, and then grow from 46,000 crores to 50,000 crores in FY27. So overall, conservative, if we calculate, right, they are giving a growth target of almost close to 25% over the, in FY27 and FY28. And if you look at PAT, right, they are targeting a PAT of almost 1,300 crores from the current close to 949 crores, which is almost a growth of around 30 to 32%. And the ROA, they want to increase from the current 3.7% to around 4 to 4.5%. And the ROE, they will be maintaining at 16%. So over here, if you look at it, right, So what is happening? The pace of the car for Capri Global is slowing down. For the past couple of years, they've been growing at the close to north of 30%, and last year they grew by almost 45%. But now for the next year, it is going to grow only at 25% as per the management plan. So one needs to consider this before taking any decision to invest, right? The pace of growth is slowing down, and generally market does not like it, and they want to see how it goes, whether it's going to be maintained at 25% or it's going to go even down further in the coming years. How market pays for the future growth. Same way market, when it sees something going down, it starts taking money out from before only. So one thing that one needs to consider over there in terms of the segment growth, right? The various division that they have, they said the MSME will grow by around 20 to 25%. Construction finance will grow around 25 to 30%. Housing loan will grow around 25 to 30%, and gold loans will again grow around 25 to 30%, and it might become almost 50% of the asset under management. So we can see over here the growth is coming from all the segments, from MSME, from construction finance, from housing, from gold loans, from all the sectors. So one need to keep that also into account. So in short, if I see, right, if you ask me about the NBFC, they are doing, I mean, overall, they're in a very good position, right? Because the ROA has improved. The ROC is close to almost 17, more than 16%, close to 17%. Everything is going well for them. But at the same time, for me, it looks like they've hit the peak. And now over here, majority of the story in the coming years would be like they're maintaining this at a decent level. Like they're growing, because we can clearly see that the management has guided now only for around 25% growth and not more than that. Obviously, I'll bet it is on conservative side. They might do better, but we have to wait and see, right? We trust what the management said and not what we could assume. So that one needs to consider very, very well. Don't look at the past growth. Look at what in the future the business is heading for. And that is one of the most important thing while taking a decision to invest in any companies in the stock market. And if you guys like this video, please do hit like and subscribe to my channel. This really helps me and encourages me also. Thank you and God bless you.